What's up guys, welcome back to Money Crow, the channel all about making your money grow. In case you guys didn't know, I'm also posting these updates every Monday onto Reddit in a subreddit called Theta Gang. I pretty much just post the update images that I show here on the side of the screen in my videos. Last Monday, someone commented on Reddit saying that I needed more stacks of cash in my videos. He explicitly stated that the more stacks of cash that I showed, the more serious he would take me. So I wanted him to know that I mean business. Obviously that was a joke. It was meant to be lighthearted. I hope you didn't take offense to it. But I just thought the prop money was a cool, prop and a fun way of visualizing the gains in the portfolio. But if you guys seriously can't stand it, just let me know in the comments and I'll swipe it right off the desk. So let me get rid of the excess stacks and we'll get back on with the episode. This is the 12th episode of my 100K wheel strategy portfolio. Wheel strategy portfolio. I'm filming this video on Thursday, December 10th after market close, so it's been exactly 80 days since I started trading in this account. I started on September 21st, 2020. My net account value, if I were to liquidate my account and buy back all my positions today, is $105,227. And the cash balance of the account, which counts all the cash collateral I used to open my positions, plus any cash I received from the premiums, is currently at $108,189. I made a total of 5 trades since my last episode, and I'm excited to share the updates with you guys. Before we continue, I just want to give a quick shout out to my amazing Patreon supporters. We have our Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys are new to the channel, this is my Patreon page where I post every single time I make a trade in my $100,000 portfolio. If you support the channel on there as a level 8 or higher supporter, you'll always be notified whenever I make a trade and you'll be the first to see those updates. So you're able to follow my trades and even copy them if you wanted to, but of course always do your own research and never just blindly follow what someone else is doing. So if that's something that interests you, I'll have a link to my Patreon in the description. Thank you. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks or free cash. For a limited time, Webull is giving away 4 free stocks, M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links are all in the description. Thank you guys. Let's jump right back into my portfolio. I started this account 80 days ago with a clean 100K balance, and you can see I now have a cash balance of $108,189. So that excess $8,189 is all premium that I collected from running the wheel option selling strategy. If you have no idea what that means or you just want a refresher, please watch my explanation video right here. I'll attach a card so you can click and watch. On the screen now is a spreadsheet that my friend helped make for me, which helps me track a ton of useful information. I'll leave it on the screen for a few seconds, but please feel free to pause the video if you want to look at it more thoroughly. I've left a link to it in the description so that way you can make a copy of it and download it for your own use. And don't worry, that one's completely free, but if you want access to this exact version that you're seeing on the screen now, I update it regularly after making trades, and I'm granting viewing access to all my level 8 and up Patreon supporters. So this is the front page of my Webull account where you can see all my open positions. I'll put it back on the screen in just a bit. I currently have a liquid cash balance of $14,189, which means I'm using $94,000 of my available cash balance as collateral for the puts that I sold, which equals 86.88% of my total cash balance. I always like to keep an average utilization rate above 90%, so I'm always looking for new puts to sell, and I definitely have my eyes on many stocks for next week as usual. And as I mentioned in my previous couple videos, I'm sticking to a slightly more aggressive strategy, selling around 0.30 delta with the goal of finally getting assigned some shares in the account. I've never been assigned shares since I opened the account. And also to boost my overall gains by taking advantage of this massive bull market that just won't quit. And even if a downturn does occur, I'd be happy owning all the stocks I'm selling puts on, so that's really not a big deal to me, especially if I can get those shares at a slight discount from current market prices, which the way I'm selling puts, I would get them at a slight discount. Real quick, if you guys enjoy this type of content, I would really appreciate it if you subscribe to the channel and like the video. It really helps me out a lot. Thank you guys very much. Let's continue where we left off from last episode. We're now on update number 80 for my Patreon updates. which is FB Facebook. In update 61, I sold to open one put for $605 in premium. I was able to buy to close it for $202 after holding for 25 days. This was more than enough premium to lock in for me for this contract, and I figured I could use the cash that I would release by closing the contract as collateral for opening a new Facebook put, this time potentially at a higher strike price. And spoiler alert, I did exactly that, so stay tuned for that update. If you're new to the series, I try to avoid getting repetitive with my analysis of stocks that I've already covered before on the channel. So rather than deeply analyzing the same stocks multiple times, instead I'll just point you guys to the episode where I explain my thought process for choosing the stock, which also includes an analysis of the financials of the company. So for Facebook, that would be episode 5. Update 81 is DBX Dropbox. I took advantage of their almost 5% rise in price on December 8th to close out my contracts. In update 73, I sold to open 6 puts for $60 each, $360 total, and I was able to buy to close all 6 for $13 each, $78 total, after holding for 13 days. I am hoping that Dropbox drops back to that $19 or even $20 price range, that way I can sell more puts on them in the $18 range. If they end up remaining steady or start showing upward movement, I might have to be a bit more aggressive and sell higher strikes, but we'll see what happens. I explain my thought process for choosing Dropbox and analyze their financials in episode 10. Update 82 is CRM Salesforce. Salesforce is another new stock on my watch list that I'm pretty excited about. I ended up adding it to my watch list on December 2nd when it hit a relatively low, depressed share price of around $220. At the time, I decided to go with a different play, so I never got to trade CRM in the portfolio. However, with this down day in the market today, they're back at around $220, so I thought selling the $210 strike would be a nice entry point. Salesforce is currently the world's #1 customer relationship management, or CRM, platform. They use cloud-based applications to help businesses with sales, service, marketing, and much more. And they have a very user-friendly platform. What Salesforce does is help companies understand their customers' needs and solves problems by better managing customer information and interactions all on one single platform. And that platform is always accessible from any device. Some of their products involve the #1 sales platform in the world, which helps companies sell faster and smarter. They also help with so many other things that businesses have the need to excel in on a daily basis, such as customer service, marketing, commerce, and engagement, all while having the #1 enterprise cloud platform. Even more, they allow users to integrate all their apps, data, and devices onto the cloud or onto their premises. They boast about their next level analytics software, claim that you can grow much quicker in your industry by using them, say that you'll build communities faster, and engages users with a fun and user-friendly way of learning. And finally, they allow users to collaborate on projects in real time. As far as their stock price, they're up 40% for the year, which means they've more than recovered from their March lows. Over the past 10 years, they're up almost 500% on a massive upward trajectory that seems to have no end. This past month, however, has presented an attractive entry point, with them being down almost 15% for the month. Capital structure shows a pretty massive market cap of over $200 billion, but in my opinion, it's still a young company with a lot of potential. And we've seen in this market that even mature companies like Apple and Microsoft, etc., have grown tremendously, and Salesforce shows no sign of slowing down. Just as a side comment, DoorDash recently IPO'd and is now sitting on a ridiculous market cap of $60 billion. And that's with only $2 billion in revenue and $283 million in losses. And how about Airbnb's recent IPO that propelled them to an almost $90 billion market cap? Surely they're boasting some incredible numbers, right? Not really. $3.6 billion in revenue for trailing 12 months and a loss of $1 billion. I know DoorDash and Airbnb and Salesforce are not at all in the same industry, but it just goes to show that even with Salesforce's insane run-up in price for years and years, they actually have an attractive market cap and growing numbers to back up that stock price. It's not just speculation and hype that has inflated their price. Income statement shows $20.29 billion in revenue. Of that, $15.11 billion is gross profit, which is insane. And $3.56 billion of that is net income, which is really good, especially for a growth stock like this. It provides a lot of safety for an investor to know that 17% of their revenue is pure net income. Profitability reiterates those massive margins that they have. I would go as far as to call their current price undervalued, even with their stock up 40% over the past year. No dividends, which is fine. Just keep on growing and I'll take that appreciation over the dividend. Valuation shows a relatively high forward PE of 47, but honestly, like I said before, due to the pace that they're growing at, they may very well be undervalued even with that high forward PE. I am hoping their share price drops even more though, that way I get assigned some shares. We'll see what the future brings for Salesforce, but my personal opinion is that right now is a fantastic buying opportunity. And to me, it looks like they won't be slowing down anytime soon. Update 83, FB Facebook. Facebook is back. If you guys remember from earlier in the episode, I bought back my Facebook contract, and that actually ended up happening during an up day, which is good for me because that means the contract was worth less, so I could buy it back cheaper. And this contract that I sold happened during a down day, which is good for me because that means the contract was worth more. So I sniped some extra premium there by getting lucky with the volatility working in my favor. I sold this put at a higher strike price for a very nice $765 in premium. And yes, I did increase my strike all the way up to $265, up from $245 last time. Being long Facebook for many years now, you get used to the temporary hurdles that it must overcome, such as Senate hearings, entities suing them, companies boycotting them, etc. But through it all, they're still able to truck along with massively growing profits year over year, and I believe they'll continue that trajectory for years to come. So I always want exposure to Facebook one way or another, and as with all stocks and strike prices that I choose, I would be very happy to own shares if I do end up getting assigned. I explained my thought process for choosing Facebook and analyze their financials in episode 5. On to the final update, number 84, XOM ExxonMobil. My ExxonMobil contracts reached a very profitable point on December 9th where it made a lot of sense to just close them out and lock in my profits. In update 74, I sold to open 3 puts for $112 each, $336 total, and I was able to buy to close all 3 for just $25 each, $75 total. I held those contracts for only 9 days, and I made a pretty crazy annualized return of almost 100% with this short play. I explained my thought process for choosing ExxonMobil and analyzed their financials in episode 3. Those were all 5 trades that I made since my last episode. Please subscribe and stay tuned for next Friday's episode. I hope you guys enjoyed my 12th portfolio update. If you did, I would really appreciate it if you hit like on the video. What did you guys think of this week's trades? Do you guys have any suggestions for next week's trades? I have about $14,000 liquid in the account right now, so if you have any ticker symbols that you're interested in, put them down in the comments and tell me why I should sell puts on those companies. I will be reading every single one of your comments. And remember, if you're interested in being the first to see all my trades, click on that Patreon link in the description. And don't forget to get your free stocks also in the description below. Thank you all so much for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.